Are you one among those traders who always thinks that why always my stop loss gets hit? Whenever I go long, market reverses, hits my stop loss. Whenever I short, market goes up, hits my stop loss. Why it happens every time with me? Is it that somebody is purposefully taking my stop loss? My broker knows that where I kept my stop loss, that's why my stop loss getting hit. Is it real that stop loss hunting takes place in trading? So if you are still having that question, still always you think like that, why your stop loss always gets hit, then this video is for you, because in this video I am going to discuss what is actually stop loss hunting is, really it takes place, who takes your stop loss, how it happens and how you can avoid it. So that all will be discussed in today's video. So my request is watch this video till the end. One of the most common question I am asked by new traders, why it happens? Is it really that stop loss being hunted in the market, that small traders, new traders stop loss being hunted in the market? They say that brokers take my stop loss, brokers purposefully hits my stop loss. So they say that brokers are the responsible for the stop loss. My answer is no, brokers are not the one who is responsible to hit your stop losses, because what broker will get? After all, whether you make profit or loss, broker is going to get his brokerage, right? Whether you make profit or loss. So how he is interested that your stop loss should hit? For him it doesn't matter. So it is not the broker who hits your stop loss, the person who hits your stop loss are big players, professionals, institutes. Why? So is it the reason that big players don't want small players to be in the market? That's why they want them to throw out of the market? Answer is no. Only reason is stock market is survival of fittest. That means the person who is fit, he will survive in stock market. The person who is weak, he will be perished. So that's why if you want to survive in stock market, you have to learn trading. So now coming to question, why stop loss being hunted always? The reason is just place one lot of bank nifty in the market price, immediately it gets executed, right? Place 10 lots of bank nifty, immediately it gets executed. Now place 100 lots of bank nifty at market price, it may get executed immediately, but you will see some slippage, right? There will be some slippage. You will not get exact price get filled until and unless you keep the limit price. Same thing, big players, they don't trade us like 1 lot, 5 lot, 10 lots, even not even 100 lot. They trade in thousands, 1,000, 10,000, millions. That kind of their lot sizes are. So if they want the lot sizes to get filled, then they need the liquidity, right? So big players have nothing to do with you. They don't want you to be out of the market. Only thing is that if they want to make profit, then they want liquidity. If they are bullish market at 30,200 in bank nifty, once they buy it, they want a big move immediately so that they can make a huge profit. Same time, if they want market to go down, then along with them there should be a big sell order, right? Then only market can go down. Suppose you bought bank nifty at 30,200, you think that bank nifty is going to go long and you kept your stop loss here. What is your stop loss order? That is your sell order, right? If you are long here, this is your sell order. So big players, what they do, they will hunt for the stop loss because they know that most of the sell orders are here. They go and hit this stop loss. So what happens? All sell orders get triggered. That means all stop losses get triggered, and along with that sell order, they also enter sell orders, and that leads to big move because all sell orders get triggered, market keeps coming down. Same thing happens with buy order. That means you think that market is going to go down, you sell the bank nifty here and you keep your stop loss here, right? Now what big players do, they know that stop losses are here. So what they will do, they come and hit your stop losses because most of the retailers have buy orders here, and immediately market will go up, and along with that they also enter the rally. So that's how big players hunts the stop loss. Now I am coming to the conclusion. Does stop loss hunting really take place in trading? Unfortunately, answer is yes. Stop loss hunting really takes place. Is it ethical? Yes, it's ethical. It's not unethical, because trading is a survival of fittest and trading is a zero sum game. That means if you are making profit, means somebody is losing there. If you are losing money in a trade, that means somebody is gaining from that trade. So now question is how I can save myself from stop loss being hunted. Is there any way I can do it so that my stop loss doesn't get hit and I can make profit? The answer is you have to play like a big player. You have to play like a professional. You should stop playing like a retailer. You should stop playing like a novice trader, and you should play like a big player in this game called trading. So that is the objective of today's video, where I made a presentation. I show you with the help of the charts, and I'll show you where retailers enters the game, where retailers enters the trade, where they keep stop loss, how big players comes and hit their stop loss. all I'll show you with the help of chart on my laptop screen. Before I go to my laptop screen, I request you please go below this video. If you have still not subscribed to my channel, please hit the subscribe button so that every time you get the notification whenever I upload newer videos on YouTube. So I hope you have hit the subscribe button. So let's move to my laptop and start with the presentation. Okay, now let me explain this with some of the charts. So look at this chart. This is December 5th, and for a long time Bank Nifty was taking support at near the previous day high, right? After taking a support for a very long time, finally breakout happened. And what retailers traders do, they enter at the wrong location. They get emotional looking at these candlesticks. When they see this kind of big red candlestick, they think that it's a bearish candle. Now market is going to go down. But what professional and big players do, they don't enter here. They don't enter short here. Why? Because they know that candle close just at the strong CPR support. This is the strong CPR. This is the support which candle will take and market will bounce again. So they know that. So they will not short this candle. Though they don't take emotional trades just based on the candlesticks. And what happened? From the CPR started bouncing again. And people who shorted this candle looking at just because it's a red candle, their stop loss would have hit. Now they are upset that their stop loss being gone. Now what they do, now they want to take a revenge trading to cover up their loss. Now they're thinking, now should I go long or short to cover up my loss? Now they see that there is a suddenly big bullish candle, 2-3 big bullish candle. Now they think that, oh, now market is going to go up and I should start going, I should take a long position and book the profit so that my losses are covered. So they go long somewhere here, and again they see that market reversing and hits their stop loss. Now again they think that why it happens every time. Whenever I take a long or short trade, it reverses and hits the stop loss. The reason being, the support, what you see in the morning, it became a resistance now. In trading, if you know basics of technical analysis, you should know support becomes resistance, resistance becomes support in market. Morning it was working as a support line which was broken here. Now it becomes your resistance line. So when price comes here, when you see that this big green candle, it's not a place to go long. Instead you should think about shorting, because now this candlestick at the resistance lines, and many traders don't follow all this. They don't pay importance to all this location and all this. They purely go on what their indicator is saying. RSI is showing buy indicator, MACD is showing buy or sell, whatever. They go based on indicator and they see that suddenly market reverses and hits the stop loss. So you should not look at the indicator. You should pay importance to right location, and candlestick only important at the right location, not everywhere. That is how small traders, retail traders get trapped looking at just candlesticks. So don't trade just based on candlestick. Don't take long or short trade. Location is more important, not just the candlestick. Look at this candlestick. Look at this chart on 17th of December. Retail traders, novice traders, the moment they see this bearish red candle, they get excited, they get emotional, thinking that it's going to go down now, right? In all candlestick patterns, candlestick books, they mention that this is a bearish candle, you should short, and they know that this is a candle which they have to short. But what happens? Once they short, immediately big bullish candle comes and their stop loss gone. The stop loss was above this candle and it's gone. And now again he'll think that why it happens with me? Somebody purposefully do it in trading. Somebody purposefully takes my stop loss. Once the stop losses hits, they were sellers here. Their stop losses was buy order, right? All their buy orders triggered, and you can see that big move after that. So what big players do, he'll not short here. What he'll do, he'll wait for this stop loss to get triggered, because he knows that there are many buy orders here. If he enters buy order, his thousands of lots get filled immediately without much slippage, and he can get good fill here, and he'll take a buy order here. He'll go long and he may book profit at the previous day high. So now you are thinking that why market reversed? Because this novice trader has shorted at the wrong location. What is that wrong location? For that you should have a chart with the CPR. So now look at this chart. This chart has a CPR. Wide CPR means stronger support and resistance. So what you have done,
What that retail trader has done, he has shorted right at the CPR where it was a support. And from the CPR, market bounce. Big players know that chances of going down is lesser and chance of going up is higher. He knows that once this stop loss is gone, all buy orders triggered, and he can get good liquidity and good fill to make a big profit. That's why, guys, don't rely on all this indicator and all this. Start having CPR, pivot points, price action, all this. Learn that can give you edge in trading, not just based on indicators. Look at this chart. This is of 25th of November. Market opened with big green bullish candle, and what happened? Started going up, and this is the pure bullish trending day, right? How many points? Almost around 160 points Nifty moved from day's lows to day's high. Traders who missed to go long on this day, now they are repenting that I should have taken a long trade on this day and I would have made a big profit. But what he thinks, okay, 26, let me wait. If I see bullish candle, I'll go long, and there may be another 160 point kind of big trending day and I'll make a big profit. And 26th, when market opens, another bullish green candle, gap up candle, and this trader who missed this rally on previous day, he excited now because he knows that today I'm going to make a big profit because previous day I missed it, and he take a long trade. He gets very emotional. This is emotional trades, and he ignored this pivot just above the candle, and exactly from that candle price started reversing. And where his stop loss, most of the retailers, novice traders are taught to keep stop loss below the entry candle. Their stop loss was here below the candle. This candle took the stop loss and started going down. So there was a small bounce, and finally it gave 100 points of move. So what big players do, they will not go long here. Why? Because they know that above this candle, then there is a pivot. Second thing is very wide CPR day. Wide CPR day likely to be a sideways day. Okay, so that's what wide CPR, when you see, likely to be a sideways day, not very likely to be a trending day. And another reason, big players know that two back-to-back trending days are very unlikely. That means if there is a trending day previous day, another same trending day, I'm not saying it can't happen, it can happen, but very unlikely. Most of the time, after a big trending day like this, either there could be next day could be sideways day or a reversal day. So big players all know this, so they will not go long here, and they will wait for stop loss to get taken so that they can short at the better place, and then they can make good profit. Retailers, new traders, novice traders going long, they think that once market opens big green candle, they think that I should catch this move before it is too late so that I can make a big profit. But professional big players, they don't think in that way. They patiently wait for the entire day for one good trade, and they enter short here because they know that all these retailers who went long here, they have stop losses here. So stop loss is gone and they book the profit. So now let's come to the last point, how you can avoid stop loss getting hunted. For that, simple answer, one of the best way to avoid being a stop loss hunted trader and become a stop loss hunter is to play like a big boy. So you should start playing like a big boy, not like a retail trader, not like a novice trader and all this. You should trade like a big players or professionals. This one is very important. No one is immune to stop loss. So if you start thinking like that, big players, professionals, institutes, they never get the stop loss gets hit. Always they make profit. No one immune to stop loss. Even sometimes big players, professional also can get trapped, and their stop loss also can get hit, but they know how to exit with a small loss. So that's why that's successful, because they know how to exit immediately if they're wrong. But knowing where are retailers likely kept the stop losses, where they're trapped, and taking trades accordingly can give you edge in trading. Again, stop loss is a part of trading business. It is cost of doing the business. So stop trading like a retailer or a novice trader. Don't be an emotional trader. That means don't take trades just based on emotion. Don't take trades just because it's a big green candle or big red candle. See the location first and start trading like a professional and like a big boy. So that's what I wanted to give you brief about how stop loss hunting takes place, how retailers think in the live market, and how big players wait for stop loss to get hunted or stop loss to get hit, so they can take the long or short trade so that they get better fill and they can make good profit. So this is about just video I wanted to show you. If you want to learn more about all this, like price action, pivot points, CPR, where retail traders are likely to be trapped, where they are likely to be having their stop loss, where you should take a long trade, where you should take a short trade, when you should take the trade, when you should avoid the trade, all this I discuss in my webinar. If you are interested to join my webinar, then there is a link below this video where I given when I am conducting my next webinar. If you are interested, you can click that link, go through all the contents, frequently asked questions, disclaimer, everything. If you are fine with it, you can contact me on WhatsApp or email, and you can enroll for my next webinar. I hope you like this video. If you like this video, then hit that like button and share with your trading communities. Subscribe to my channel, and very soon I'll see you with a new video. Till then, take care and thanks for watching my video.